Hey guys, it's Marc Fowler here from Home Loan Connection. I've had a few requests from some agents and property advisors that I work with saying, can you help us communicate this low deposit first home buyer product to our buyers and show them how it's affordable and how they're not really getting charged more over a 2-year period because they're a little bit fearful about it, which is fair enough if they don't understand it. Now, this isn't to be considered any credit advice, and it's not for you to help really explain the product to them, but it is to help them, feel comfortable that they understand it, that they're not getting ripped off. And it really comes down to the question, do they want to pay $15,000 up front today, or do they want to pay that over 2 years, essentially, all right? Or the same amount over 2 years. I'm going to show you really quickly or as fast as possible how I can today on how it's possible. All right, so let's start with a traditional first home buyer loan. So the top second tier banks, they will say to you, all right, first home buyer, you want to buy a $500,000 house and land package in southeast Queensland. You need to provide us $25,000 or contribute that amount. Now, some of that can be made up of a $15,000 first home buyer grant, but nonetheless, we need you to put in $25,000, all right? Now, what most of these first, second, third tier lenders are saying these days is that you need the 5% genuinely saved. If you don't have that, there are a few lenders that will say, okay, well, Mr. Client, you've saved $10,000 genuinely. You don't have the actual 5% cash genuinely saved over 3 to 6 months. So we will accept a clean rental ledger from you where the repayments are roughly the same as what you would pay on your mortgage repayments if you had a home loan. Okay. We also require that you have a credit score above 750, 800, usually 800 or higher. And that you're a pretty cookie cutter client, all right, and that you also have minimal personal debt, including car loans, all right. So if you have not a genuine 5% saved, so again, you're going to get a gift and use the first home buyer grant, and you have an average credit score, or you have car loan debt or car loans plus a personal loan, credit cards, most top tier lenders, their algorithm will kick you out before you get anywhere. Or they'll waste 4 to 6 weeks of your time. They'll press a magic button, the credit department, after they've wasted their own time and yours, and the agent's time and the developer's time, and the magic button and the computer will say no. All right, so that's the breaks. So if you want to get into the market, which for all intents and purposes, they say that the market is rising at the moment. Here's an article on domain.com.au. I don't know what's going to happen with the market over the next, 12, 24 months, but this is what's happening. I can tell you from the amount of loans that we're seeing come through the door, you would say that this could or might happen or probably will happen. You see here that they're saying Brisbane is going to rise 16% over the next 12 months. All right, so on a $500,000 property, this property here could be worth $580,000. All right, so if you say, I don't want to proceed on a low deposit sort of structure with a loan, well, then you save 5%, $25,000 genuinely. Well, guess what? That property is now worth $580,000. So you have lost $80,000 because you've waited 12 months. As simple as that, really. This is a foot in the door product. So let's get on with it. $500,000 property, you need to contribute one way or another $25,000. All right, so in this case, your loan will be $475,000. That's 95% loan to value ratio. $475,000 divided by 500. But it's actually inclusive of lender's mortgage insurance. Okay, this is what first home buyers need to remember, is that you're going to be up for, let's make that red, $14,500. All right, so your actual base loan amount is actually $460,500. All right, so again, at the end of the day, your total loan balance will be $475,000, but you have to pay a lender's mortgage insurance, plus you also have to pay circa, $3,000 lender fees as well. So your actual total funds to require, the cash or the amount that you have to contribute through gifts or the first home buyers grant cash, is actually $42,500. All right. So that is 25 plus 14.5 plus 3 equals 42,500. As some of you will remember, you can actually use the first home buyers grant in Queensland of $15,000. So you deduct that off the 42.5 equals a net funds to complete required out of your pocket. One way or another, $27,500. All right, so that's how much you have to contribute. Now, if we went with a bespoke model, all right, where this is a low deposit, no deposit, cash deposit, I should say, out of your pocket product. You have an okay income, maybe $100,000 between you two, and you want to buy a $500,000 property. Well, then we could do that. So again, you're going to have to fund $25,000. Your total loan amount, again, will be $475,000. Now, what about the lender's mortgage insurance? Well, that's zero. So you don't have to pay any lender's mortgage insurance with this product. I will come to the reason why that is in a moment. So your base loan amount is actually $475 versus $460. All right, the total loan amount again is $475. It is a 95% loan exclusive of lender's mortgage insurance. You can't escape any lender's fees, of course. So your actual total amount out of your pocket or total funds to complete is 28 versus 42.5 with this product. All right, now you get the first home buyers grant again to deduct off that, and your net funds to complete is $13,000. So you are versus $13,000 versus 27.5, you are $14,500 better off with this product. I've just realized that you might not be able to see part of that on the screen. So I'm sorry about that. I'm not a video expert. But anyway, so there you go. So that is you're $14,500 better off on day dot after land settlement, all right, doing this product. All right, now obviously there's a little kicker to it. So if you do a traditional 95% loan, inclusive of lender's mortgage insurance, your loan repayments, this is on 3% interest, principal and interest variable, will be around about $462. Now, if you're getting a 95% loan, especially if you're using a rental ledger on a construction loan, I can tell you that your rate is not going to be much lower, if any lower, than 3% P&I, especially if you're a first home buyer. All right, so $462 a week, $24,000 a year, or over the 2-year period, you would have paid $48,000. All right. With the bespoke product, all right, it's the same again, $500,000, $475,000 loan balance that you're paying principal and interest on, and the repayments per week is $598 per week. This is where most people freak out. And then the repayments over 12 months are $31,000, and over 24 months it's $62,000. So look at the difference here. You've had 24 months, 62 minus 48. Some of you have already done that maths. So it is $14,144. Where have we seen that figure before? Well, essentially, it's the same amount as the $14,500. In fact, if you want to get down to the nitty-gritty, you're actually $316 better off over 24 months doing this product, the bespoke product, if you like, than doing the traditional 95%, including lender's mortgage insurance. All right, so I hope you'll understand that. This is a 95% loan inclusive of lender's mortgage insurance. You have to pay this. All right, so your actual loan really that you're getting, this is what some people don't sort of understand, which is fair enough, is your actual loan really on a 95% loan is $465,000. All right, okay. And then the lender essentially pays this for you, and then they whack it on top of this loan, bringing it to that $475,000. With this, you're just getting a $475,000 loan, no lender's mortgage insurance. Okay, so the repayments are higher per week, but you haven't had to pay any lender's mortgage insurance. And if you want to look at it this way, even though these aren't mortgage repayments that you're making, they're kind of the equivalent because you're paying the $14,000 over 2 years. Now, here's the kicker: is that after 24 months, particularly in a rising market, you know, let's say that this article becomes real. I'm not saying it will, but let's say that it might. That $500,000 property that you've bought is now worth $580,000. All right, so even if you've paid down the over 24 months, this is down to $450 divided by $580. Your property is now geared under an 80% LVR. It's at 77.5%. I would refinance you after 2 years. That would be the goal, and you would get repayments on that because it's below an 80% loan to value ratio. I can tell you that the repayments would be well under $400 per week. So it's a little bit of short-term pain for long-term gain. This is the product that can be good for you. This isn't credit advice, but it's an idea. All right, so if you want to get your foot in the market today at $500,000, you don't have a deposit, it's going to take you too long to buy a deposit, you have too much debt, your credit score's not that good, you're not going to get in the door at the moment with a lot of these lenders. We don't have the genuine 5% deposit. It's just not going to fly. Even if you have a great credit score, and even if you have a 5% deposit, but a lot of debt, personal debt, there's still, the algorithms might knock you back. And so this is where this product becomes really quite good for a lot of people. Even if you have a lot of debt, but you still service it, all right? Even if you have zero savings almost, you have a credit score over 600 and you have 50K in personal debt, personal loan, and you've been servicing that well and no late repayments, they will still give you the loan. And you can actually get out of it, this 25 grand here can be funded with the first home buyer's grant and a gift from the builder disclosed to the lender. All right, so you can see it here. Builder incentives allowed. Now, in order to get the no LMI deal, if you like, in order to get the no LMI deal, so pay no LMI, you have to build with one of these three builders: Sandsky, G Developments, or Sun Vista Homes. All right, now I'm not getting paid anything. I'm not getting any referrals from them. You know, I do know of them. I know that they do good work. I have a lot of colleagues that work with them, agents and so forth. And from my understanding, they do excellent work and they're happy to work with you and all that sort of stuff. But the deal is, if you build with them, you will pay no LMI on this product and they'll help you get into the market. All right. So, and with this product as well, you don't even need a rental ledger. All right. Now, obviously, the lender is going to help bolster your application if you do, but as long as you can show that you've been putting away a few $100s a week or whatnot, and they can see on paper that you're a good person and that you're doing your best, 9 times out of 10 you'll still get approved. All right, so hopefully that this video is a little bit longer than I expected, but hopefully that really helps nail it home. You're not paying more doing this product, okay? You're paying exactly the same over a 24-month period, if not slightly less, and then we would refinance you, or that would be the goal, to refinance you to a lower rate, assuming the interest rate market and credit market are still the same, of course. We would refinance you to a lower rate. So over a 24-month period, you're paying slightly less than doing a traditional first home buyer loan. Hopefully that helps. Contact me with any questions or concerns at all. I'll put my contact details in here. Marc Fowler at Home Loan, or mfowler at Home Loan Connection. That's my email address. And my mobile number, should you want to contact me, is 0433 265 789. I hope that's helped. Have a lovely day. Bye.